Good morning, everybody. It's Thursday, December 8th, 5:45 a.m. Central Time as I speak here. March corn futures up 0.75 cents at 6.42. January soybeans up 5.5 at 14.77.5. March Chicago wheat up 3.25 at 7.52 3/4. March Kansas City wheat up 1.5 at 8.50 1/4. March spring wheat up 1 3/4 at 9.03 3/4. If you guys are listening on the podcast, appreciate it. If you're watching on YouTube, subscribe, like, comment. All of that stuff will help YouTube to help me to grow this channel. If you guys would like some additional information from me, visit my website, www.standardgrain.com. Check out my premium subscription service today, guys. I send my premium subscribers a ton of information direct from me every single business day. Morning email goes out about 5:30 a.m. Central Time. In that email, you'll see every overnight headline you need to be aware of, charts, graphics, weather information, all of my grain marketing recommendations. My daily subscriber-only videos are part of this deal. Yesterday, I talked about demand for U.S. corn and why I think it's a problem potentially for price prospects. We ran through all the segments of demand for U.S. corn, ethanol, exports, feed usage, all that stuff, and kind of talked about each specifically. Kind of my general thoughts, some things to be aware of. Did a balance sheet review also. If you guys are interested in this sort of content, sign up today. $50 a month. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else, I promise. Crude oil prices continue to decline. Your nearby January 23 WTI contract traded as low as 71.75 per barrel yesterday prior to a slight recovery. This was the lowest trade for any spot WTI contract since December of 2021. Spot month futures have lost nearly $59 per barrel or 45% since peaking in March. Following Russia's invasion of Ukraine. We are set to see the first back-to-back quarterly losses in crude prices since the middle part of 2019. You've got general concerns regarding economic growth, the economy, recession, all of that stuff. EIA reported yesterday that distillate and gasoline inventories increased. The national average gas price was $3.33 per gallon yesterday. It was $3.34 per gallon the same date last year. And I guess in regard to gasoline, inflation is over given those statistics. Of concern to corn growers or maybe people involved in ethanol prices have declined pretty sharply here. This is Chicago Platts futures. It's a general gauge of ethanol prices, but they fell to their lowest level since February, I believe. So some people think that this could be a threat to the ethanol industry potentially. It's going to result in reduced margins, especially in areas of, say, the Western Corn Belt where corn basis is really strong. Now, ethanol producers, they'll continue to grind corn for ethanol, even if margins are negative to a certain point. But it doesn't really take much to hurt ethanol demand in like percentage terms. So if you chop corn demand via ethanol by 2%, that's 100 million bushels on the balance sheet. So it doesn't take a whole lot to have balance sheet implications. So this is something that I think is perhaps a negative deal for the corn market potentially. Now, that being said, ethanol production was really good last week. Weekly output 1.077 million barrels per day. That was up 5.8% on the week, down about a percentage point versus the same week last year. But this is a really good print, not just seasonally, but just in general. That's a very strong ethanol print. We're running very close in terms of ethanol production to 2019 or last year. So ethanol production to this point has been very good. Ethanol stocks are high. They were up another 1.5% last week, 23.3 million barrels. That's the highest level of ethanol stocks on record for this time of year. Ethanol stocks are up almost 14% versus the same period last year. On average, over the last 4 weeks, U.S. gasoline demand is soft. Implied demand is running 7.1% below the same period last year. Mexico says it's going to rework its ban on GMO corn imports, or its plan to ban GMO corn imports. The country has offered to extend a deadline to ban GMO imports to 2025 from 2024 previously. Mexico's economic minister said that the country is creating a proposal to modify and make clearer, in quotes, the presidential decree. A spokesperson from the National Corn Growers Association said this: any attempt to ban any form of biotech corn, including corn for human consumption, is illegal under the USMCA. Extending the deadline would also extend the uncertainty for America's corn growers who are making decisions now that will affect crops well into the future. So it's the National Corn Growers Association's job to speak poorly of this deal and be critical of it. But I think that Mexico is in the process of backpedaling here. I think they'll continue to import U.S. corn for animal feed. There might be some adjustments. Now, in news that is perhaps related to that, Mexico's deputy economic minister said that the third round of energy consultations with the U.S. will take place this month into January. I've kind of thought this whole time that with this corn ban, and I know that they approved this a while ago, but I feel like they're seeking some sort of trade leverage here or some sort of leverage when it comes to the U.S. and Canada. And they've got this energy dispute. Maybe this is tied together in some way, shape, or form. Russia's wheat exports may be record large this year. Well-followed private group Sovecon increased its estimate for Russian wheat exports to 43.9 million metric tons from 43.7 previously. USDA's got that number at 42. If that new print of 43.9 is confirmed, that would be the second most wheat that any country has ever exported in a single marketing year, only behind the 1981-1982 United States campaign that resulted in 48.2 million metric tons of exports. So a ton of wheat being exported by Russia here. Sovecon said this in a research note. Current rapid exports are based on active sales since early October, when Russian wheat started to regain its competitive edge. That group estimates that wheat exports out of Russia in the October through December period will be up 33% versus the same period last year. Russia's got the cheapest wheat on the export market, record crop. The U.S. is doing just bottom of the barrel export business. We've got a crop report tomorrow. I've got on my screen here the estimates for U.S. Carryouts, corn, soybeans, and wheat. USDA typically doesn't do a whole lot in December. More changes typically seen in January. Some people think they might make cuts to the corn export projection in particular, maybe some other tweaks to the U.S. balance sheet. Watch for any adjustments to the South American production estimates. We know that Brazil's in good shape. We know that Argentina's in trouble. So keep an eye on that sort of stuff. That deal will be out tomorrow morning at 11 a.m. Central Time. We've got an export sales report this morning at 7:30 a.m. Corn sales for the current marketing year expected 300 to 950. Soybean sales expected 600 to 1.2. Wheat sales, again, should be very bad, 150 to 350 expected. The cattle market was mixed yesterday. Feeder cattle were lower. Cash cattle in some light trade was a little bit softer versus last week, 153 in the south, 156 in the north yesterday. In the outside markets, the U.S. dollar is a little bit higher. Stock market's up marginally. The S&P's up 10. The Dow's up 60 points. Metals are mixed. Crude oil attempting a rebound here, up $1.14 in the January WTI at 73.15. That thing traded south of 72 yesterday. Everybody have a great day today. I'll talk to you Friday.